Yay. It's almost there. And then in the chat for participants, if you need to change your name, because sometimes you're probably logged in with your parents' Zoom, you can do that. You can just click on your name and change your name in there if you want to. If not, that's okay too. But you can use the chat to say hello. I'm going to go ahead and introduce our awesome special guest. And so I am Rachel. I am Rachel Schmidt. I am the Youth Services Program Coordinator here at the Santa Clara City Library. And we've had this wonderful partnership with Key Point for many, many years. They help to support our summer reading program every year. And that's really awesome. But they also in turn do a lot of teen finance programs. And so they're back again this year to do that. This year is really special because we are having a teen internship this summer where some of our teens are actually working at the library for 10 weeks and they're earning a scholarship. And so this really applies to a lot of them. And I see a lot of them in here. So thanks for coming. So make sure you take some notes about saving money and tips that our awesome Key Point folks here are going to share with you. So first I'll introduce Elena Rogers. She's really been our key contact at Key Point. And then we also have Doron Neumann, who's going to do mainly the presentation here today. This is a two-part presentation, so make sure to come back next Wednesday if you can. We'll also record it. And we'll have it on our YouTube if you can't make it, but it's better to be in person. And so I'll hand it off to you, Elena. Thank you so much.
Great.
And I'm gonna say bye.
Thanks, Rachel. And as Rachel said, my name is Elena Rogers. I'm the Business Development Manager at Key Point Credit Union. And I work with Doron. Thank you all for attending today. I'm going to go ahead and just let Doron dive right in. So I'm going to hand it over to him and hope you enjoy his presentation. It's really informative.
Great. Thank you very much, Elena and Rachel, and thank you for having me today. As Elena said, my name is Doron Neumann. I'm from Key Point Credit Union, and let me share my screen so I can put the presentation. Okay. Trying to share my screen. Okay, just confirm that you can see my screen. Elena, you can see my screen. Can you see my screen?
Mm-hmm.
Okay, wonderful. Okay, so again, I say my name is Doron Neumann. I'm from Key Point Credit Union, and I've been with Key Point Credit Union for the last 18 years, and in banking for over 25 years. And it's something that I really like to do is talk about money basic management, basic money management, and help others to really learn about money and what to do in order to really have a great start for a healthy financial path. So we're going to have two sessions. Today's session, I'm going to talk a little bit about what are financial institutions, what products they provide, to give you some little bit idea of really what are the tools that you have to manage your money. Next week, we're going to dive into what is credit score, how to build credit, what are the elements or the factors that really affect your credit, and also talk about budget and other tools that will help you really with your building a strong foundation for future financial health. So if you have any questions, don't hesitate, put them in the chat and I'll be very happy to answer them. And then we're going to have to the end, we're going to have a session where we can actually have a Q&A. So when you talk about money, there are a lot of questions. People have a lot of questions, not just when you're young, but when you're getting older. I have two sons, both teenagers. One is a sophomore at university, and the other one is going to be senior in high school. So I have the experience not just by teaching, but also by really helping them how to shape their understanding of money and understanding what is financial education and so forth. But there are a lot of questions out there, not just for young adults, but also for adults to really understand how to manage your money and what the best decision that you can make to make sure that you build a great future. So really the history of money, in the beginning, people were actually traded shells for food and food for shells and clothing and so forth, until really I would say the really beginning of the banking system started in Europe in the Middle Ages, and when we see some establishment of banks, and especially in Italy, that will help us starting really commerce and trading with other, really the start of banking. You can see there were a lot of it before, but the establishment of modern banking, you can see start in Italy in the beginning of the middle of the Middle Ages, around the 12th century or so forth. And what happened really when they started modern banking, we had some establishment of financial institutions. So let's talk a little bit about what a financial institution. You see them every day. You probably drive by them. A financial institution is an organization like a credit union or bank or brokerage or any company that licensed to receive deposit, make loans, and offer financial services. Any company that's able to offer deposit account, checking account, loan, savings account, and investment services. And most countries, those financial institutions are regulated by the government or by central bank. In our case, some of it regulated by the government and some by the Federal Reserve. So financial institutions are really organizations that help you, provide tools for you to manage your money, and they're all regulated. Financial institutions are important to the economy because they provide services to consumer and businesses. And they first of all, they provide a safe place for you to store your money, but also and help you to really develop a whole commerce, because people can make payment instead of you traveling. Let's say if there was no bank and you need to buy something in New York, you will have to travel to New York to get the thing from New York, to pay for it, and then come back here and have it. But because we have banks, we can actually do transactions, and you can get your goods and services from far away or even from close by really using the bank as a mediator to pay for the services and goods. So it's very, very important for the economy to have financial institution for people to save money, to have their money saved, to store their cash, but also to develop a rich commerce and economy. Financial institution that you have credit unions like Key Point Credit Union, Mary West, Navy Credit Union. There are many credit union financial institutions. There are banks, retail banks like Wells Fargo, Chase, Bank of America. Those are retail banks. They're all financial institutions, the companies that can handle and help manage your money. Commercial banks are banks that only exclusively deal with businesses. They provide services to businesses. They don't provide services to individuals. They provide specific services for businesses. Where in our area, we have Comerica, Heritage Bank. Those are banks that are specifically in Silicon Valley Bank, specifically help businesses with their financial transactions. Investment banks or their brokerage, they only deal with investment. They're online banks. So the difference, some credit union banks, retail banks have branches, like Key Point has branches, Bank of America, Wells Fargo do have actually physical branches. Online banks do not have any physical branches. They do everything online. So there are different online banks that only operate online. And there are central banks. Central banks usually are banks that are regulated by the banks of the country itself. So here we have the Federal Reserve. It's called the central bank. In Europe, you have the central bank, the European Central Bank, and it's put by the country. It's to regulate money supply. It regulates all the bank. Most of the banks and financial institutions are regulated by rules and regulations that come from the Federal Reserve and for the government. So that it's the bank of banks. It's the central bank or Federal Reserve in the U.S. So those are financial institutions. Those are organizations that are licensed by the state or by the government to do business and provide financial services to consumer and businesses. So what the difference between, I want to go a little bit between the difference between credit union and bank. So, and I'm going to come back to it later, but this is just give you an overview. Credit unions, in order to join credit unions, someone has to be eligible to join. So what happened, credit unions started as agriculture financial institution where the farmers needed to collect the money to provide other farmers with money, and over 120 years ago. So there are credit unions. In order to be eligible to credit union, you have to be a part of a group affiliation. So that, like the teachers credit union, only teachers can join, and the families, their Pentagon credit union, only can people that are military can join. And those are like almost like a Costco of financial institution. In the banks, anyone can join. Banks, the customers call customers, and in credit union, the customers call members. The credit union and banks offer the same financial products, and we'll go into it later. What is saving account, what is checking account. The credit union owned by the members, the customers, where the banks are owned by trade on the stock, most of it on the stock exchange, or owned by shareholders. The boards, every company has a board. It's the body that actually give the direction for the company what to do. The board and the banks are paid, and for credit unions are the board are coming from the membership, and they are not paid, the volunteer. Banks are for profit, and credit unions are not for profit. They're cooperative, not for profit, cooperative, financial cooperative. We all pay taxes. Credit union exempt of some taxes, but we all pay taxes. And credit union have share branching, which they can use branch. We can use ATMs and branches of other credit union, where banks, if you go to Bank of America to do the transaction into Wells Fargo account, you cannot do it. You have to do it in your bank. And we all regulated and insured by the federal government. Banks insured by FDIC, Federal Deposit Insurance. I'm going to go into it in a few minutes. And our credit unions are insured by the National Credit Union Share Insurance Fund. We have the same insurance. So there's a different financial institution that we have. I'm going to go a little bit over terms because I believe that we do it. It's nice to go over terms to understand what are the terms before we dive into what are the tools that we have. Deposit or loan account. A financial institution maintains a transaction between the financial institution and the consumer recorded. So it's really any deposit or loan, anything, it's really a recorded transaction between the person and the financial institution. When you put money in, and we go into it, the financial institution recorded, and you put the money in your bank, and we take a loan, it's something that the bank will give you the money, and it's a recorded the information within the bank. So we know how much you owe, we know how much you have within the institution. Account holder is the person that on the account, meaning that they're the designated, authorized person to sign on the account. So if sometimes you have two people on the account, there's a main person, the main holder of the account, the person the account belongs to them, and then there's a joint person on the account. So you can sign on the account, and you're authorized to do business on the account. So let's say if you open a checking, I have a checking account, and you come to a branch and say, I would like to take money from the wrong checking account, you're unable to, because this is my account. I'm an authorized signature, I'm authorized holder. Mean that if I don't give you permission to do transaction, take money in my account, you cannot take money out of the account. So this is an authorized signature transaction on the account. Joint account is between two or more people that are owners of the account. So when you open an account, you're an account holder. When you have someone on the account, if you're under 18, you probably have your parents or guardian that are joint account. They sign for you because you're not 18 yet, that we have to be on your account. So what kind of deposit accounts we have? We have a checking account. I'm sure a lot of you heard about checking account. We have, maybe we can put in the chat. Maybe I can ask you, can you put in the chat and you can tell me what other accounts do you know about? You want to put in chat and tell me what other accounts you know about? Savings account, great. Savings account, right? So we have checking account, we have savings account, we have money market account, we have a certificate account, and so those are accounts that you actually we call deposit account. You can put money into them, and I'm going to go into each account in a minute. Now we also have loans, right? Deposit, when you actually take the money and put it in a financial institution, a bank or credit union. A loan is when you go out and ask money to the financial institution to borrow from them, to take money from financial institution. So what kind of loans do we have? We have home loan. Any home loan called a mortgage. So sometimes you hear mortgage, really mortgage is a home loan. It's a loan that's directed for buying a home. It's called a mortgage. You sometimes hear the word mortgage, you're not sure about it. Mortgage is a loan toward a home, to buy a home. Car loan, right? Student loans, personal loans, credit cards are loans, business loans. And so this is some of the types of loans that we have, that you actually can take money or to borrow money from the financial institution to obtain goods that usually maybe you wouldn't have enough money to obtain, and you'll be able to get it from a financial institution. So financial institution is really, it's an organization that take money in, deposit in from people, right? And lend money to people that are looking to buy homes, cars, have to finance the school, personal loan, credit cards, and business loan. So this is the way banks and financial institutions work. Take money in and they lend money out. In a way, they borrow money from the consumer. When you deposit, the bank borrow money from you in a way, and they lend it to others. And this is the way financial institutions do work. So what is deposit? Deposit is money that is transferred or put into an account. You cannot just go to a bank or credit union and give you money and say, here, hold my money. You actually have to open an account. An account is a ledger, in a way, this where your money is held. It's a record that says that this is your account, this is your information on the account. And every time you put money, deposit money into the account, it goes into this recorded ledger, meaning that we know how much money you have in your account. So every time you transfer money into a specific account, has a specific number, account number into it, you deposit money into the account. So when you go to a branch of credit union or bank or credit union to a branch and you say, I want to put money in my account, it's really what I would like to see. I would like to deposit money into my account. So the other way of getting money is to withdraw money, right? So every time that you take money out of the account, you withdraw. So if you go in and say, I would like to take money from my account, it's the right way to say it. I would like to withdraw money from my account, and I would like to take it, remove money from my account. So let's say if I go into my branch and at the branch and deposit $100 in my account, I'll say I would like to deposit $100 in my account. I give them the account number, they deposit right into the account. They will give me a receipt. And then if I want to get money, and if I go into a branch, I say I would like to withdraw $100 from this account. They will check my ID. They make sure that I'm the right person that owns the account. And I withdraw, let's say I withdraw $50. I would like to withdraw $50. And then once it's verified, you can withdraw $50, meaning that you only left $50 within your account. So we have deposit and withdrawals. So what is checking account? Checking account is account that holds holding financial institutions. It's secure and used to manage your income and expense and pay bills. Usually checking account is an account that you want to put money into it, where you can manage your expenses, your income, your paycheck comes in. And if you have any expenses to pay bills, to buy food, this is what checking account designed to. It's an account designed for you to help you to manage your transaction, to know where the money is going to. So if you have online banking, you can actually see what, or mobile banking, and you log into your account, you can see where the money goes to. Where I put money here, I bought some with Safeway, I bought coffee at Starbucks, I pay this bill. And so this is where the money goes in, and you can manage your expenses and pay your bills. This is what the checking account is designed really to be a management tool for your income and expenses. The money go in and where your money goes out to pay your bills. But also when I put money in a financial institution, I want to make sure that I save for the long term. I grow my money can grow and I can save for the future, right? So this is what we have a savings account. A savings account is an account that lets you store your money securely while earning interest. So the financial institution, while you put money in your savings account, the financial institution will give you interest, will pay you, because remember, it's almost like we borrow money from you. When you give us money, we put it in your financial, we put it in your savings account, and we will pay interest for you. And the funds are easily accessed when you go and we put deposit money in your account, when you can do it online, transfer money from your checking account to your savings account, move money from your savings account to your checking account. It's very easy access. However, savings account, it's an account if we want to make sure we have money, as it says savings, we want to save it for the long term. We want to save it for, if we want to maybe go for school, we want to save money for school, or big purchase or emergency. Usually for emergency, we want to make sure that we have money there, that it's not in a checking account and it's stay within a saving account. It's emergency money. If we need it, we know we have the money, we can move it into the savings account. Now, savings account do have some restrictions on how many times you can actually withdraw money from savings account, because savings account are designed to make sure that you save money. If you just use it as a checking account, then it's a checking account. So you want to make sure that you save money. There's some regulations depend. There's what's called Regulation D, that actually if you withdraw more than 6 times out of account, if you go into the branch, you withdraw more than 6 times, each financial institution can give you different penalty, how much you pay. Some people give you $5, some people $10. How much actually how many times you can withdraw out of your savings account, because again, it's designed for you to save money, not to manage your money. If you want to manage your money, everything has to do within your checking account. So this is a savings account. Savings account is an account when you can earn money, you can earn interest, and you save money for the long term. So now we learn about two type of accounts. Any questions so far? Okay. So now we have money market account. So what is money market account? Money market account is also type of savings account. However, it offers by bank and credit union here, but money market account. The difference between a regular savings account and money market account is that on a savings account, on a money market account, you can earn higher interest. However, the requirement for money market account, the minimum balance that you have to put in it, is much higher than regular savings account. So let me give you an example. Most savings accounts have a minimum balance that you have to maintain within the account. Sometimes it's $5, sometimes it's $25, sometimes it's $100, depending on the financial institution. And you earn a certain amount of interest on it. On a money market account, most of the time, the minimum balance is $1,000 and above, or some institution will ask for $2,500. However, your interest that you earn on this account is much higher that you earn on a regular savings account. So one thing you can do always, and you can go to a financial institution, you go to keypoint.com or Bank of America or Wells Fargo or Pentagon Credit Union or Maywest or any credit union or any bank, and you can see what the rates are. You can click on rates, or you can go to savings account, checking account, and you can actually see what rates are given for the account. So you can make a good decision upon, okay, who's paying most rate and what are the requirements. Sometimes you're going to see a higher rate, but then they have required minimum of $1,000 into the account. So this will give you some idea to the requirement that's needed. Checking account you can write checks on. I mean, if you can write a check, it is why it's called checking account. You can write a check for. Savings account, there's no checks on savings account. You cannot write checks over savings account. Money market account, you can write checks, but it's limited. Each financial institution limit the amount of checks that you can write for money market account. However, you can write checks for money market account. So again, we have checking. Most checkings do not earn interest. Some checking, there's some interest checking that you can earn money on. Savings account is an account that actually you can earn interest on, but you want to keep money there for emergency or to save for something that you want to buy in the future. And again, money market account is an account that usually the minimum balance is much higher and you will earn higher interest, and you'll be able to write some check for it. But again, it's not an account to manage your money like your checking account. Is an account that you can save for the long term. And now we have a certificate or certificate of deposit. In a credit union world, it's called a certificate. In a bank, it's called a certificate of deposit. So what it is actually, certificate of deposit, it's similar to savings account, is where you put your money into an account. It's an account, and that earn usually higher than savings account and money market account, earn a higher interest rate. However, you cannot withdraw the money for a certain amount of time. In a way, you can withdraw it, but if you withdraw the money, you will have penalty. So if you want to withdraw money from savings account, you can go withdraw money for savings account. If you want to withdraw money from money market account, you can go ahead and withdraw money from money market account. However, if certificate, you have a certain term. Let's say certificate for 1 year. I mean, let's say it's a certificate for $1,000 for 1 year, will pay you a certain amount of interest. Means that you put a contract between the union financial institution saying that I will put this money for 1 year, this $1,000, and I will not gonna touch it. And at the end of the year, I will get the money back, but I will earn higher interest, higher than I will earn in saving and money market. If I do take the money, I will break this contract in a way, and it will be a penalty. One, I'm gonna lose my interest that I may be able to earn, and I'll also have a penalty. So usually it's not. So when you get your money back, it's not going to be $1,000. It's going to be much less than $1,000 because you have to pay a penalty. Because a certificate is really a contract between you and the financial institution, where the financial institution say, "I will pay you higher interest as long as you keep this money for a certain amount of time." So there are certificates for like 3 months, 6 months, 1 year, 2 years, 18 months. 18 months, 2 years. 3 years, 4 years, 5 years, and so on. Usually it's up to 5 years that you see certificate of deposits or certificate. And as higher the term, the longer the term, usually the higher the interest that you will earn on this money. So certificate is in a way saving. Some people say, if you hear some people say CD is certificate of deposit. It's another tool for us to save money. So we have saving, we have money market, we have certificate. Those are accounts designed for us to save money. Checking account, our account is designed for us to manage our daily expenses, our income, and so forth. So when I get my income into my checking account, I can say, well, part of it can go into savings account. So I designate how much money I want to go to either the savings account, to the money market account, depending on what account I have and how I manage my money. So is your money secure or insured? Well, years ago, you have to walk around with a small pouch and you have to put in your belt. All your money was there. You either put it on your mattress or you make a hole in the ground and hide it, or in the walls. And wherever you hide, people were hiding their money because the money was not insured. If someone take it from you, then, bad luck, you lost your money. What happened today when you open an account at the registered financial institution, like I said before, it's regulated by the government, your deposit is insured. So for banks, the Federal Deposit Insurance Corporation, FDIC, insure that any money that you put in your bank, in the deposit in your checking account, up to a certain amount, usually it's up to $250,000 per account, or the account holder. So if you have 2 people on the account, it's going to be 500,000. But on the account is the main person, it's 250,000. It's insured. What it means that if the banks goes out of business, or the credit union goes out of business, in this case, it's for banks right now, Federal Deposit Insurance Corporation, FDIC, the government will pay you back your money. So let's say I deposit $100,000 in my bank account, and let's say Wells Fargo, and Wells Fargo goes out of business, the government will go in and pay me $100,000 because I had this money the government insured. So this is what, if you withdraw money and go on the street and lose it, it's not insured. It's only when the money is within your account. Okay, so it's any deposit account, checking account, savings account, certificate deposit, money market, They're all insured. When you go to open an account, if you go to a credit union, go to a bank, you want to make sure that you ask them, is my money insured? Do you have a federal deposit insurance? For banks, do you have a FDIC? Can you show me? Everyone has to, when you insure, you have to display the seal of the Federal Deposit Insurance Corporation, the FDIC, for banks. And for credit union, it's the National Credit Union National Administration. Actually, have the National Credit Union Share Insurance Fund, which insure the accounts at credit in the same level that FDIC insure for banks. So it's the same insurance for banks and credit union. And in case those go out of business, the government will interfere, will go in and will pay the amount that you have the deposit up to a certain amount. It's usually $250,000 per account holder on the account that you have. So, and again, to get more information about it, when you open an account, you're going to get a disclosure that tell you exactly how much is the account insured and so forth. But again, some people confuse the thing that if they take money out of the bank and they lose the money, they insure, they're not insured. Once you have your money in your possession, it's your responsibility to secure it. It's not the financial institution responsibility. But if you have it within the financial institution and something happened, your money is safe and secure. And what happened, this helped to give people more confidence to actually go ahead and use financial institution to do their business. Standard amount, again, it's $250 per depositor, per insured bank or credit union for each account ownership category. So this is a little bit about what is the insurance per account. So it's few common banking terms. One is interest. I'll go a little bit there. I go interest. Interest, ATM and PIN, account number, routing number, debit card, online mobile banking, fee and disclosure, and we start with interest. So what is interest? Interest is actually a fee that paid on borrowed money. So when you talk about interest here, people say, what is your interest? What is interest? Interest is a fee that paid on borrowed money. So when money is deposited in an account, in a savings account, you receive interest, right? The person that has the savings account receive interest, receive a fee because the financial institution borrowing away money from you. We borrow the money from you, put it in your savings account, we borrow the money from you, we pay you interest on this money that you gave us. And usually it's coming in a way of percentage. You hear, so when people talk about interest, they talk about interest rate. What is the rate? 1%, 2%, 0.5%, 1/4%. It's usually in terms of percentage rate. So when we talk about interest, you talk about percentage. So when you pay interest to the bank or the credit union, it's on money that you borrow. So if you take a loan from the credit union, let's say you buy a car loan, from us or from any other bank, you take, let's say $10,000, you're going to have interest that you pay back for using our money, right? So you will pay whatever the rates today, 2%, 3% or 4% or 5%, you will pay this interest rate back to the bank or the credit union. So when you put money in a savings account, you get paid interest, you get paid fee from the bank for putting your money into the bank or the credit union. When you take money out of the credit union or the bank, you borrow money, you pay interest for them as a fee for using the credit union or the bank's money. So this is what interest is. Interest is really fee that paid on borrow money, and always put in the terms of on a rate. This is what interest. Saving account, we talk about it. When you have a savings account or certificate of deposit or money market, you get paid interest from the bank or credit union. When you have a loan, you pay back the credit union interest for borrowing money for them. ATM and fee. So does anyone knows what ATM stands for? Can you put in the chat what ATM stands for? Can you put what ATM stands for? Excellent, very good. So ATM is automated teller machine. came out in the 60s, 70s, 1860s and 70s, I mean, 1960s and 70s or 18. And really it's helped to make sure that you have access to your money 24 hours a day. So instead of having, you said the branch will be open at the time, a branch will be open from 8 or 9 to 5. When they closed the branch, there was no way for you to get money. So here we use technology and it came automated teller machine. So really it's about what, 50 or so, 50 or 60 years ago, we have started with ATM machine. And those are machines that actually connected to your account, and you'll be able to do transactions on those accounts. You can do balance inquiry, you withdraw money, you transfer funds, you deposit checks, you take money out. You can do a lot of things to ATMs. Today, we have smart ATMs. You can do almost anything that you go in for inside to talk with the teller, you can do on a smart ATM. So it's really great. It's open 20 years. You can access to ATMs 24/7, 24 hours a day, 7 days a week. They always work. It's not a problem, and you always have access to your money to take money cash if you need, or do any transaction on the ATM using between your account and so forth. You can transfer money from your checking account to savings account and vice versa. You can deposit checks. You can take money. You can do many things on the ATM. Then you have a PIN number. So you have your personal PIN number. In order to access your account, you're going to have a card, and I'm going to go into this in a minute. You have a debit card, and a debit card is the direct link to your profile, your accounts, your profile at the financial institution, and each debit card will have a PIN number. And the PIN number is actually your secret code. When you put your card in, it lets you give you access to your account. If you don't put the right PIN number of times, the machine will take your card and you wouldn't have access to it, or it just will block your account because it will think it's a fraud. So always remember your PIN number. Never, ever, ever share with anyone, your best friend, anyone. It's your PIN number. Never put it in your wallet by your debit card, because then someone will use it. Don't tape it to your debit card. Keep it in your head. Remember it. And this is something, it's a secret code that you should never share your password in your computer. Do not share your PIN number, because if someone has your card and your PIN number, they can take money from your account. So ATM, you can see ATM, you can share, you can deposit cash, you can take cash out. Each ATM, depend on the financial institution, depend on your account status and how much money you have, will have certain limits on how much cash you can get a day, how much you can get a month, and so forth. So you need to work with look at the disclosure the financial institution will give you. Ask, how much money can I get in 24 hours a day, because there's some limits, or how much I can get when I withdraw my money. There's some limit on how much you can withdraw at one time, and so forth. So let's go into account number and routing number. So we're talking about checks. Many of you probably did not write a check yet. Less and less people write checks, but checking account come from check, because this is what used to be a checking account, the checks. But on your checkbook, when you open a checking account, you're usually going to get a package of checks or checks. And I want to explain here what are everything that you have on the check. So usually you have on a check is you'll tell you the routing number. Routing number is the information of the bank or the credit union. Each credit union and bank has a different routing number. So the routing number is going to be here. It's distinguished. Each bank and credit union has a unique number. So we know what institution you have your account with. Your account number, it's a unique to you. There are no two the same account number. So we know that this account number and this is institution. Let's say this is your account number and Key Point, this example, and it's not, but this is account number and this is the financial institution. So we know you have account in this financial institution, and this is a check number, the check number that you write. When you write a check, you say pay to order of, let's say Doron, you write me a check, you say Doron, and I pay $100, you put $100 here, and you have to spell it here, $100, and you have to write for what, it's optional. Usually there's a line here for date, always put a date in, and the signature. So this is what a check is. And usually when you write a check, you receive a check, you can deposit the check, you will take it either to you can deposit in the branch, you can deposit it in an ATM, and you can also deposit to your mobile phone. Depending on the amount, some institution will limit how much you can deposit on a check, but on your mobile phone, but most people deposit, they take a picture and deposit their check into their account. So, and if you have to write a check and you don't know how to, I'm sure YouTube has a lot of tutorials that you can ask for. You can ask your parents, or you go to your bank or credit union, and someone can explain to you how to write a check. Never write a check, ever write a check, put the amount and sign it and leave it blank. Because if you lose it, I can put my name here and go and withdraw money from your account. So never ever sign a check, it's called a blank check. In the order of no one, you don't put anyone here, you put the amount of money, and always make sure you know where your check, because someone can write a check on your name and it's IOU, mean that I take it to the bank and or the credit union, and I can cash it and you're out of money. So it's really, it's a instrument that you can actually use to take money from your account and to pay money. You can send people a check. If you want to pay them, you can send them a check and so forth. Less people do it today because you have Venmo, you have other services you can actually do online transfer to people and so forth. So it's easier. But before it used to be check. This is what it's called checking account because people used to write a lot of checks. Debit card. Debit card is a payment card that deducts money directly from the customer checking account to pay for purchases. So you can use debit card, you can use it at the store, you can use it at the ATM machine. The debit card will have a PIN number to it. It will give all your information on it. There's expiration date on it. If you don't have money in your checking account, the debit card will not work. It will decline. The debit card is linked to your checking account. Some people direct link some account. You can actually, when you use the ATM, you can actually, because it's direct to your profile, you can actually take money from your savings account as well using your debit card. However, if you don't have money, if you do a purchase at a supermarket or at the store and use your debit card, it's automatically deduct from your checking account. And if you have no money in your checking account, the transaction will decline. And sometimes you're going to have fees to pay because the transaction was declined. So each bank and credit union has different policies on what is the limit. Sometimes people give what's called a courtesy payment, that it will not decline. It will give you a buffer of $100, but then you will have to pay a fee of $29 or $30 and so forth. So you need to make sure that all these things are, I'm telling you right now this because when you open a checking account, those are questions you want to make sure you have in mind when you say, if I do transaction, I don't have money in my checking account, would I be penalized? Was any fee to it? Or it will decline. If it's declined, there is any fee to it. So you need to make sure that you remember this question to ask when you open your checking account. So when you actually carry it, you don't have to carry cash because most places today will take a debit card. On a debit card, there's your bank or credit union name. There's the front, the unique number, your credit card's unique number. The expiration date, the card holder, and what the network that it works. Is a MasterCard network, Swiss network, with the different networks that they will work on. The back magnetic strip here has your information. So usually you have a hologram here, has some information, smart chip in here, it will have some information, and you got your information here. So when it's read it, it's actually it has certain combination of reading the information from here and from the smart chip to make sure that you got the right information and you can go to transaction. And we ask you to put the PIN number, you verify by reading the magnetic strip and the smart chip that actually this is your PIN number and this is a valid account. You always want to sign in the back of the account, your debit card, and this is a security code. There's a security code in the back. So this is a debit card, and a debit card is tied to your checking account. Also, there's a number of your institution. And this is very important. You want to keep your number. You want to make sure that you have this number also on your cell phone, store on your cell phone. So what happened today, there are a lot of scammers out there, and I'm sure you know about it. People will call you and say, hey, this is your bank, and we saw your transaction for such and such, and I would like to get please give me your social security number, your account number, and PIN number. I want to verify that it's the correct number. And people do give it, but it's a fraud. So what happened? You give the fraudsters your debit card number, your expiration date, your social security number, everything, and they just go ahead and take all the money you have in the account. My suggestion, when someone calls you, say, no problem, I can't talk right now, let me call you in a few seconds. You hang the phone and you call the number. Either you go to a branch, if you go to a branch of your credit union or bank, or you call this number, or you go to the website of the company. If they have a chat, you go directly to the chat, but you call this number and say, someone called me, said I have a fraud in my account. I just want to verify. And if there was something, they will let you know, yes, there is some warning, fraud warning. Let me get you to someone else that will help you. If there's nothing there, they will say, there's nothing there. It was probably a scam. So it's very, very important not to fall to people that call you. Credit union and banks will never ask you for your social security, your password online, your PIN number, and they will never ask you for this. So just to be aware of it, because it does happen a lot and people fall for it and lose a lot of money. Online banking. So when you open an account, any checking account, savings account, you can actually open online banking. Online banking is you can see all your profile, everything you have on a web browser. So I go in, I have an Apple, I use my Google browser, or I use Apple, and I log in and I put the web address, and then I log in. When you open an account, they can help you to create your online banking. They can give you a username, help you to set up the password, and they create an online profile for you, which you can see in an online profile. You'll be able to see your account and everything. When you open it, you want to learn how to work it. If you can start it, and if you go to a branch to open, they can help you to set it up, and they can show you how to transfer money, how to navigate to it. It's very important that you learn how to navigate and what the tools are within your online banking. Many institutions provide a lot of tools within your online banking, but mainly, as you can see your balance, you can see transactions. I have a habit of I log every day into my online banking and to see, if there was no fraud on my account, what payment I pay, what payment went okay. So there are a lot of tools. They can set up automatic payment. You can see all these things. So there's a lot of information about your account reside within the online banking. So you want to use online banking to check all the information about your financial, to see how much money you have in savings account, and how much, before you use debit card, you go to the store, use debit card, and I'm not sure that I have, how much I have. You can actually not just use online banking, but can actually use mobile banking, because most people use the mobile banking. You can do it on your phone. You can load the application of that financial institution and log into it. Someone help you to set it up. If you go to the branch, it's very easy. And you can log into it and say, oh, I look at it and I see I want to spend $100, but I only have $50 in my checking account. I'm not going to use my debit card. Or I'm okay, I can use this. I have a balance of $200 and only transaction, I'm buying a sandwich and it will cost me $15. So I'm okay. So always make sure that you check how much you have in your account. It's very easy. It's very quick. Also, we can do with mobile banking, and most people do today. You can put your debit card under the wallet. You can do a wallet if your online banking is wallet, Apple Wallet, Google Wallet. There's some different wallets, and you can actually just pay with your wallet. Just make sure that you check your balance before you pay. You know that you can actually afford it and you can pay for it, and not your transaction will not decline. So You can choose again, when you go to the wallet, you can put your debit card first on your wallet and check that you can pay for it. So different ways to pay for it today, either your phone, some people put it on the watch. You can pay with cash, you can pay with debit card. There are different ways that you can pay today. But mobile banking provides you a lot of tools to manage your money. You can transfer money on your online and mobile. You can just do, if you transfer money from your checking to savings, from saving to checking, or you want to pay someone, it's very easy. You can do it to mobile banking. So today, the difference between banking, I will say even 20 years ago or 15 years ago, when you had to do a lot of things manually, go to the branch and do it. Today, a lot of convenience with online banking and mobile banking. You write these checks, you can use your phone for many things, and you can actually see your information on the phone, which is a great tool to really help you to plan your finance and know exactly where you are. So those are great tools to have. Account disclosure. When you open a new account, there are a lot of disclosures that come with it, because account is actually a contract. It's a legal contract between you and the financial institution about how they will handle your money and how, what would they expect from you, and if there's any fees and any other requirement when you open your account. So a lot of people say, yeah, no problem, let me sign it and all this stuff. But you want to make sure that when you open an account, you have to sign certain documents. You have to provide ID, because the financial institution needs to know who you are and who they're doing business with. It's part of the Bank Secrecy Act. Means we're regulated, or banks and financial institutions regulated to know who they're doing business with. So you will have to provide something, Social Security. You will have to provide ID. All this information, make sure that you're the right person that you do business for, and also the right person that will give you access to your account. And when you sign it, you open an account, it's a financial contract between you and the financial institution. So you want to make sure that you go over it, you read it. It's a lot of financial jargon into it, but if you don't understand, you want to ask people. But yeah, it's a lot of, I would say, information that you may not use, but you need to know what you're signing for. There are fees. There's different fees on different accounts. Different financial institutions will charge different fees. And will give, every time you open an account, any financial institution will require to provide you with a fee schedule. So you see if maybe there's a minimum balance in your account, maybe there's a monthly fee, maybe there's a fee when your debit card decline, when you write it not a good check, or you deposit the check and the check doesn't, you get check from someone and the check bounced, meaning the person who gave you the check doesn't have enough money in their account, you would be charged for it too. So all these things depend on the financial institution. You want to see what are the fees on accounts are. So again, there's checking account fees, minimum balance charges, overdraft charges. If you take more money than you have in the account, there's overdraft charges, return deposit, hard copy statement. You always want to sign for e-statement, because then you don't want to pay for hard copy, and ATM fees. Different ATMs will have different fees. If you use ATM that it's not part of your bank or credit union, it might be a fee to it. So you want to ask if there's a fee. You want to find out before you use the ATM. Suddenly you see, because what happened, let's say you use, as I mentioned before, when you use a credit union ATMs, most credit unions are under the same network. So if you use our Keep-On debit card to take money out of True Line Credit Union in North Carolina, you will not pay any fee. But if you use ITM debit card at Wells Fargo, you'll be charged by Wells Fargo, and you may be charged by us too. So, and it depends on what the financial institution charges, so forth. You have to look at fees are different, so forth, but it's something for you to understand and know, so you don't suddenly see, oh, I got all these fees. Why? Because there are fees coming to the account. Financial institutions need to stay in business, and part of how they stay in business, and they're charging fees for certain services and products. And lost card fee. If you lose your card all the time, you get the fee. Also, if you lose your card, and you found out that you lost your card, you want to call right away. Some companies have what's called a you can actually flag it on your online banking that you lost your card. Some companies don't have it. You have to call in and say, I lost my card. Can you just totally disable my card? So you disable your card right away. No one can use it, but you want to call right away. This is why you want to have the number for your financial institution and program in your phone, because you can call them right away and say, I lost my card, and they will disable the card right away. Some safety tips for preventing fraud. Check your account activity regularly. As I said, you always want to make sure that you check your account, you check what you have in it to make sure that someone just didn't steal your information. Keep your PIN and password secret. Never share your PIN and password. Let me go back to check your account activity regularly. Actually, I'm going to go to it in a minute. Use a strong password for online banking. Changes all the time. Don't put your password under your keyboard or under the table. Make sure that you keep it and you know what it is. And changes because someone can steal it, and then they can go into your account and wire all the money out of your account. Change password often. Do not give your account information over the phone. No one's going to ask you for Social Security, for your password, your PIN number, all this. No one's going to ask you. Do not give your account information to the mail. Don't write your account number, PIN number, and all this. Sometimes you're going to information say, we just found out there's a fraud in your account. Please complete your information and mail it back to us. Never, and neither through email. Never put in email your account information and a password. So either mail or email, never put the information, your account information. If you're not insured, call your bank or credit union or go to the branch of your bank or credit union and ask them. They'll be able to help you. Do not click on embedded links in email. If you have sometimes you get a fraud say your account was breached, click here and put your information. Never. I will delete the email and make sure you go to the website directly to the browser, not through an email. Never. Use antivirus protection software in your account on your computer. Do not use public computers for online banking. So we're talking about the library. We know cases. I mean, I met people that use their online banking in the library, and because they got free time in the library, they did not logged out. They just left the account on. Someone next come to them and log into the account, or they did not clear their browser, and so all this information was in the browser. People were able to use their account, or people stood behind them and actually looked where they're logging into the account and so forth. So if you have to, make sure you use the precaution. Make sure people don't stand behind you. You need to make sure you log out, you clear the browser, you reboot the computer. But I would recommend not to use your online banking on any computer, in any public computer. It's a library or it's any internet cafe or whatever it is. Don't use to log into your online banking, for someone be able to take your information. Check secure connection. If there's not secure connection, don't log into your online banking. Report lost card immediately. Make sure that you report your card immediately if you lose it. Be aware of surrounding an ATM. What happened today in ATM? Sometimes people put scammers, but actually not the right where you put your card. They put a scammer on it, and you swipe it, and you put the PIN number, and you read it, and they will steal your PIN number and information. So what happened when you start your account? I will ask the person that works the branch of the credit union, or you can stop by the branch of credit union and say, "Can you explain to me what is the right thing about the ATM?" And they will explain to you, show you, right? This is what where you put the card. You know, make sure there's no scammer. Sometimes you put cameras around. You check the surrounding of the ATM. Make sure there's no one point the camera to see where you put your PIN number. So those are important things. Make sure that no one can see your transaction you do, because if they get your information, they have a scammer that scam your information from your card and they take a pictures, a movie, a video of what your PIN number that you put in, and they can put it together and then they can drain all your account. So you need to make sure that you're aware of surrounding, people don't stand behind you and look, your PIN number and so forth. Which was scammers again. And so this is a little bit about today, some of the tips that I want to give you. In addition, a couple of years ago, I went to the library and I looked at how many books about personal finance there are in the library. And I was amazed to see there were hundreds of books about personal finance. And it's a great way for you to start taking some look in the library and take some basic personal finance and money management books and start reading them. I think it will really help you. This is really today is a basic about, again, what tools are that what are financial institutions are, what tools we have that help you to manage your money, some of the very simple terms that we have. Some of you may already know them. Some of you maybe have a checking account, a savings account already. But again, those are the beginning. And you're already ahead of everyone because you're participating in this session today. So again, it's very important to learn more about it and not start with the basics and then develop the knowledge from there. Next week, we're going to go over again, what are credit, what are loans, how to build credit, why credit is important, and the tools of budgeting and also personal balance sheet. So we'll take all these tools together and see how we actually work all these together to really build a financial plan for us and establish great habits. Also, I know for today, Rachel, we're gonna be raffling some Amazon gift cards, $25 to $25 Amazon gift cards. So I think Rachel gonna take all the names and draw 2 names, and the people that win, she will contact them, and then she will give them the cards. We will send you the cards online. And then for next week, we're also going to have 2 $25 Amazon gift card for 2 people. So to win. So if you win this week, doesn't mean that you cannot win next week. So join us next week. Rachel, I don't know if you need any more information and so forth. Do they need to send you the information, or how would you go about it? And actually, let me open it for questions. See if you have any question about today's session.
Is that Shell that's with us?
Yes. Hi.
Hi.
Rachel has stepped out, so I'm here.
Okay.
I'm going to go ahead and do a random number generator with the panelists and pick them from that number.
Yeah. I don't see any questions in the Q&A yet submitted, so.
Yeah.
Okay.
Let's see if we have any questions first.
If you have any questions, please do ask. And if you have any question for next week, it'd be wonderful. If you think about something before next week, I'd be happy to answer questions. But with that, how many of you do have checking and savings account? How many of you use, let me stop sharing. How many of you use mobile banking and online banking and find it very useful? And there was a question about, will the same Zoom link will be used for next week's session?
Yeah,
I think
that was already answered in the chat. Yes.
Yeah.
Mhm.
Okay. Anything else? Well, again, thank you very much for joining us today. And again, next week, we hope to see you next week. And again, thank you and have a wonderful afternoon.
Thanks, guys.
Thank you.
Thanks, Shell. You guys can email me the winners.
I think I have a question here. I have a debit card account, but it's linked to my mom account, and I don't know if it's considered mobile banking, but I have an app, Chase, that can review my account balance. So I'm not sure about Chase, but I mean, if your mom accounts, so you have, if you have if you have a debit card under your mom account, it might be just that it's limited to see only your account under your app. I'm not sure how Chase works on it, but if you have an account, usually you have access to your mobile banking. But I'm not sure how it works for Chase, so I can't talk for Chase. But if you have an application, you log into the application and you see your account, it's considered mobile banking. Yeah. Okay. Well, thank you, and I talk with you next week.
Thank you, everyone.
Thank you. Bye-bye.
Thank you so